Hi everyone, it's Vitri Trong, your trusted mortgage advisor. I want to talk about this question that's come up a couple times this week. Do you need to have your mortgage paid off for retirement? I think traditional thinking and traditional advice has always been, yeah, paid off. That way there's one less payment in retirement because you have limited cash flow in retirement. Um, I don't think that advice still holds true today 100% because the world's changed quite a bit, right? No one could have anticipated the dramatic jump in cost of living. On the other hand, you can't have imagined how much home prices are now, right? A mortgage on $1 million home is a little different than a mortgage on the $200,000 home that like a regular house used to be. So this question really does bear more consideration in financial planning. Um, and if you feel like you need to pay off your mortgage, you just got to really ask yourself why, right? Like you got some considerations here. Like first of all, if you're going to pay it off, where's the money coming from? Like, is it good cash flow? Like you have strong cash flow and not a problem. If you do, then you're probably just going to pay it off anyways. You're probably not clicking on this video. But on the other hand, if cash flow is tight and you have to really make a lot of sacrifices to pay off your mortgage, really consider why you're doing it. May not be worth it because there may be better places to put your money. For example, building your retirement nest egg to create income, right? Debt is a lot easier to pay off than it is to create income. On the other hand, well, I guess not the other hand, but related to that, if you're thinking about depleting your investments, I'd probably say stay away from that. First of all, you're probably moving into a lower returning investment. Like if you've got a good financial planner, you're probably making 4 or 5% in the market. Um, why would you take that and pay down your mortgage, which is at all-time low rates right now, right? Say between 2 and 3% if you've got your mortgage in the last couple, 3, 4 years, it's right in there somewhere, maybe 3.5%. But if you're going from a 4 or 5% return down to 2% return, because that's what you're doing, right? You're buying a mortgage, you're paying back your mortgage at 2%. So you're buying an investment at 2%. Doesn't make a whole ton of sense because when you're doing that, like what do you actually hope to accomplish when you do that? Because you can't eat the four walls of your house. Right? That's a really big consideration. You actually need a big income stream in retirement to pay for it, to actually live. But if all you have is a paid off house and no nest egg, you're in trouble, right? I've seen that quite a bit with clients with, $2 million gorgeous homes and they're on food stamps, right? You find them at the bank on the last Wednesday of every month getting their GIS, right? So that's not the position you want to be in because if you are in that position, what are you going to do? How are you going to overcome that lack of income? Likely you're probably going to sell your house to access the equity, right? So you've put yourself to release the equity, you have to sell the home that you love and move out of the neighborhood that you love into something less expensive to access that equity. Whereas if you didn't pay off the mortgage and instead built a nest egg, you could still stay in that home. And all you have to really do is restructure that debt to make it more affordable, right? Or maybe you're one of these clients who might have to look at getting a reverse mortgage. Then what are you getting yourself into? Now, don't get me wrong, I like reverse mortgages, they're a good product. But if you worked hard to pay off your mortgage, why are then you turning around and putting another mortgage on to access the cash flow, right? So just think about what you're actually going to accomplish by paying it off. And then we touched on this, but cash flow, right? If I told you that your mortgage was 0% interest and you had to make no payments on it, what would your attitude towards that debt be? You're like, it is what it is. I don't actually care about it because it doesn't affect my retirement cash flow, right? So then the debt itself isn't inherently bad. It's the impact of cash flow that we actually want to manage. And that's what I wanted to talk about, right? Because on a traditional mortgage, your payment is, part interest, part principal. And in the beginning years of your mortgage, it's more interest than principal. But towards the end and middle part or whatnot, you're probably looking at, 50-50 for a lot of clients, right? So half that mortgage payment is interest and half of it's principal. So if you don't actually want to pay off your mortgage, you can go interest only, cut that payment in half, right? So if your mortgage payment is $1,000 and we cut that in half and you're at 500, that's an extra $500 a month in cash flow. What does that do for you, right? There's an extra vacation there perhaps. Perhaps there's a payment on a sports car. Maybe you can visit family in other parts of the world more frequently, right? But whatever it is, like that extra cash flow is going to help you live better, right? So, your home can also help you with cash flow in the other way, right? You could take money out of your home to supplement your lifestyle. So here's a crazy idea. Why not take your RIF payments down to the minimum? Why not really slow down all of your investment withdrawals, because they're all taxable at full income, right? And then use some of your mortgage, which is tax-free, so you need less of it every month to survive, right? Or to fund your dreams and goals. So your home can really help you out if we think about it as more of a financial tool than this asset with a debt attached to it that you have to pay off, right? So, I challenged some clients this past week with that line of thinking, and we got a good conversation about it. They've gone back to their financial planner to really talk about some of those ideas and having their home play a more active role in their retirement. So that's my recommendation: is go talk to your planner, talk to a debt expert like myself who can really structure your retirement correctly, your debt correctly in retirement, to really take advantage of this great home that you have, and help you and do more. So that's it for me today. Hope that was informative for you. And if you have any questions, do drop me a line. Would love to hear from you.